Hello, and welcome to Pro Trader Strategies Market Commentary for Monday, January the 11th. My name's Eric Wilkiinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We haven't had any economic data come out today that should be affecting the markets. As you can see here, the NASDAQ is up just over 2 points, flirting with unchanged for the most part throughout the day. As you can see here, we also came down and tested this Fibonacci 61% retracement level, which coincidentally just coincides with my value area low for the last several months. It's starting to look like the overall markets are getting a bit long in the tooth on this oversold side. So we could see a bit of a bounce and maybe even see the NASDAQ rally up to test that point of control right there at around 4,442. So we'll have to see how that works out. But for right now, it is a bear market. Same with the E-mini S&Ps, flirting with unchanged. As you can see here, they are just barely in positive territory. And they also came down and tested a Fibonacci retracement level, the 23% area. So that's pretty important. We'll have to see if the bulls can take control here, because the bears are fully in control of the E-mini S&P, as you can tell on this chart. Looking from a daily perspective, now again, this is the volume profile broken down on a daily segment within 15-minute candles. So the overall markets created a value area high for the intraday and a value area low for the intraday, and we just settled above this value area low, which on this candle would be an indication to buy for the short term, and should want to come up and test the point of control, if not the value area high in the next several time frames. All right, moving on to some things that I've done. In this DIA, you guys know that I've had DIA on, which is the Dow Jones Industrial Average ETF, and it is just a composite of all of the Dow Jones stocks. Now this I sold quite a while ago, and I actually have on a strangle in there, but I rolled down my calls because they were pretty much worthless at this point. I had on the February 175, 176 call spread in there, and I originally sold it for 32 cents and bought that back for 17 cents. I rolled that out to the February, or rolled that down, I should say, to calls that are closer to at the money, to collect a little bit more premium in there and keep some short deltas. And I sold the 170, 172 call spread. So I widened it out just a little bit and collected a little bit more premium, just to keep that dream alive. So this is the 172 area. So I want to be out if it starts looking like it wants to go back above that. And the 170s are right here, which is a pretty good resistance area, it looks like to me. So hopefully I can hold on to those and collect a little more premium on that. Now, rolling onto Facebook. Facebook just needed to add some short delta. It's, I'm thinking it wants to go down and test this 200 moving average, and along the mantra of this going a little bit further lower. And I had on the January 103 calls and sold them for 47 cents. So hopefully those will continue to slide. I sold those a couple of days ago, and since I didn't do a webinar, or didn't do a market commentary on Friday due to the webinar, I'm talking about that one a little bit late. So that is in the Facebook. Now onto Bed Bath & Beyond. This was the earning trade. And if you guys follow me on Twitter, I tweeted out this earnings trade right when I put it on. And I sold the January 51-42 strangle. So that's the 51 calls and the 42 puts to create that strangle in January with only a couple of days to go on that earnings announcement. And I originally had sold them for 55 cents. The next day bought them back for 22 cents. Okay, so that was my earnings trade that I did going into Friday. XOP. XOP is not looking good. So I talked about this type of trade in the webinar that we did on Friday, which was doing long put spreads. And with XOP, I'm looking at this to continue to sell off. And there's just no light at the end of the tunnel for these different oil and gas companies. A lot of them are looking at going bankrupt, so there's not going to be a whole lot of exploration anytime soon that I can see. So I wanted to do a downside play in here by doing a long put spread. And I go into all the details as to how I pick the strikes and things of that nature in the webinar, so you can check that out at protraderstrategies.com and get that sent to you. But I followed along with what I talked about in that webinar on picking my strikes and did the February 30 puts that I bought and then sold the 25 puts to help finance some of that extrinsic value that I was paying for those in the money puts. So that's part of what we talked about in that webinar. And I did it for a debit of $2.59. So I pretty much got it for the intrinsic value, maybe just a little bit less on that. So that worked out pretty good. Hopefully that will continue to sell off. And then in GoPro I have on another strangle in there, and my puts, I am short the 15 puts, and I was short the 28 calls. So those 28 calls aren't helping me out anymore, and GoPro has continued to slide. So following along with my rules that I talk about in all these webinars and basically daily on these commentaries, as soon as one side of my strategy gets tested, that's when I'm going to get a little bit more aggressive with the side that is untested, and I'm going to roll those down. And since February still has a lot of time left in it, I didn't roll it out in time. I just rolled those calls down, and I took my 28 calls and rolled them down to the nearest 30 delta, or trying to get as close to a 1 standard deviation move as I could, or 1 standard deviation delta. And I took those February 28 calls and rolled them down to the February 18 calls, and I collected a total of 70 cents more for that strategy. So now I have on the 18-15 strangle. If it continues to slide even more, I could roll those 18 calls down to the 15 calls and create a straddle. So that goes along my rules as how I play those out. As soon as I get tested, that's when I start to get a little bit more aggressive with those rolling strategies, and that's what I did with GoPro. I collected another 70 cents. So now my total credit on that 15-18 strangle, if you will, is about $1.80. So it gives me a little bit more wiggle room to the downside on that trade, and hopefully we can get a little bit of a pop back and get right inside my 2 strikes. So we'll see how that works out. That's about all I got for you guys today. Check out Friday's webinar. We did it on put spreads, just like I built out that XOP oil and gas exploration ETF, and you can play a little bit of this downside with those with limited risk. So that's a really good one. Also, we're getting into earnings season, so while you're at Pro Trader Strategies, check out the webinar that we did on earnings. Those earnings trades are kind of like my bread and butter in the last couple of earnings cycles. So those have been working out really well, and I hope they work out well for you guys. That's all I got for you today. Other than, if you can't take that, take it easy.